Everybody wants to know a secret to daily bias, but I can tell you what, there isn't really one. Probably been caught out before in a trade and think you've completely lost it because you got the daily bias completely wrong. My belief is that you traded what you expected to see, not what the market is actually giving you. What I'm going to go through in this video is how to actually trade what the market gives you. Not have a general bias for the day, but have a consensus of, if price does this, I will do this. Not, okay, we're expecting buys, I'm going to find zones for buys. You have that open-mindedness and you have that ability to read what the market gives you and to trade it successfully. The purpose of this video is to get you to start thinking in ifs. You load up the market and you say, okay, if price does this, I want to do that. If price does this, I will do that. And it's that sort of thinking that you need to start developing. You can't just draw out zones because the 4 hour was bullish that you're now going to expect price to solely just go up. The market will print what the market wants to print. I will clarify before we get this started, I only use the 30-minute and the 5-minute time frames. This is because I like to keep it simple. I preach simplicity. If you've seen my YouTube banner, the whole point of this video is to keep trading as simple as possible. Trading doesn't have to be as complicated as people have made it to be. You're looking at the chart here and you're probably thinking, well, it's already complicated because what the heck am I looking at? Well, red, the colours in red, the candlesticks, represent London session and Asia session. If I'm trading US session, I will not use or even look at previous Asia session zones or London session zones. I trade US zones off US zones, meaning that we can go maybe a week in the past, maybe 3 months in the past to find some zones that happened in US session that we can get a trade on. So if you haven't put it together, the beige candles are the US zones. And I'm going to show you how we use that strategy in this video, as well as working with ifs. If the market does this, I want to do that. Please stop drawing zones and expecting price to completely push up with you just because the 4 hour or the 12 hour said we're bullish. Please start working. And this is why I use the 30-minute time frame, because we are day traders. I take a trade in a day. If I was, swing trading, give me 12 hours, give me the daily candle, and then I can work off there. But because I'm day trading, because this is my strategy, I use the 30-minute and the 5-minute. So without further ado, let's get started. So we're looking at the day. We've come to the charts. We want to trade US session again, which is the beige candles. What zones do we mark out? Using my strategy, I will use the top zones of the previous US session because price is near here. If price was all the way up here, I'd maybe use this US session high right here. We like to use the highs and lows of previous US sessions. So I draw the high and low, and basically that is sort of it for the day. Stay with me, because it might seem simple. You might think, well, this doesn't work, but I can tell you it does. The simple plan for today would be, okay, if price breaks above here, gives us a tap back in, I want to see price go further up. If we get a 5-minute reaction candle, which again I will show you as we go through the video. If price breaks this US low, gives us a tap back in and breaks down, I want to take price to the sell side. So it turns from just looking at the market and say, well, the 4 hours bullish, I'm going in for buys off this zone. It turns into, if this happens, if we break below this US low, likely chances we're going to keep selling off. If we get a retest in and a 5-minute reaction candle, then I'd love to see price come further down. On the flip side, if we break above and get a retest in, we can clearly say, well, price has broken to the upside. So if it does this, I would like to see a tap back in, a 5-minute reaction candle to take price further up. And then we can find US zones once we've realized what price really wants to do. So now that we've jumped to the 5-minute time frame, we're simply going to be looking for what we drew out. And I will give multiple examples of this. I know I'm in replay mode and it does give it a lack of purpose. However, the concept is still the exact same in the strategy I use. You can look at the Discord in the description below, completely free, and you can see the zones I mark out every single day and the prices and the trades we take off them to get some winning trades, sometimes losing trades, but that's part of the package, that is part of the deal. So if I play price on here, this is London session at the moment. Asia session obviously happened back here. Like I say, I'm just not interested in them. So we're looking for a break above, and we want a solid break above. This candle close right here would signal to me we've got a solid break above here. I want to see price come back in now, gives a 5-minute engulfing candle because we're looking to the buy side because we've broken this structure. So I'm looking for a 5-minute bullish candle that we can take all the way to the upside. So if we continue to place price along here and we just wait for a tap in. Yes, we got a tap in, but if you're going to take a trade off of this candle right here, then maybe you need to evaluate what a good candle from a zone looks like. A bullish candle, that's what we want. We want an engulfing one. So our trade would start right here. We got our tap into the zone and we got our engulfing candle. What we would do, stops. We have a 3-rule process, and you probably, if you've seen my videos before, I've gone through it before. Below the wicks, below the bodies, and below the zone. In this trade, we get all 3. Sometimes you're just going to get below the body and below the wicks, because it has to be below the bodies if it's below the wicks. However, now we've got our trade entry, we'd simply look, what can we target? Well, again, we're looking for that beige. We're looking for the beige US sessions. So we would target the highs and lows of previous US sessions, and that's as simple as it can be. So if we drag this thing right out here, be wary of levels that we've encountered resistance on. For example, I wouldn't maybe mark it as a zone with the rectangle tool. I would simply just maybe put a horizontal line on, maybe use it as an alert tool just to say, well, look, if we get to this price, potentially we could reverse, so it might be worth going break even or even taking some profits out the market and leaving the rest run to a final take profit. Or in our case, we close every position at 5 o'clock, winning or losing. We take everything out of the market because after 5 o'clock, price normally, not all the time, dies out. So now that we have our zones, if we jump back onto the 5-minute, we're going to target the top one. However, if price does come to this zone right here, we can most definitely use it as a break-even target or a TP1 target. So if we go to play price on and we just account for some spreads, always account for spreads. If you're trading a prop firm, and just be careful and read what your broker says. If you're trading spreads, then just make sure you have a little bit more leeway just in case price wants to wick down and stop you out. It gives you a better chance of being actually in the trade instead of being caught out by nothing and then seeing your trade shoot all the way up. So always have that in mind when you're trading. But if we play price along here, then we can see price climbs. And again, like I say, always be wary of places where price has respected, like I say on the line here, which was right here. If we jump back down to the 5-minute here, we stop all trades at 5 o'clock. So we're just going to put a horizontal line at 5 o'clock, just in case the trade wants to run over. Like I say, then we would be out of all positions. So if I make that black and just play price along here, what do we get? See price, and then you would have closed out at around, put it here, a 1 to 2.6. Again, if you're risking 2%, which again, for trading prop firms, I do have a little strategy in the Discord that you can have a look at and see if it's for you. But this is the basic concept of the trades we'd be taking. You look for what if this happens. If this happens, I want to take buys. If price completely broke to the lower side, I'd simply be looking for sells. I wouldn't take buys off the middle of the zone because the structure points weren't there. If we jump back to the 30-minute, yes, we have a structure point here, but with the US low right here, the price could react from and maybe go bullish. It's not worth it. So I'd rather see either a break below this structure point, below this US low, get a tap back in to take price further down, or I want to see price break above this US high, get a tap back in, and then we can try and take price to a previous US high or a previous support and resistance level where price has just tapped in multiple times, just because we can guarantee that price will react again, but we just don't know how it will react. Could reverse, it could just blow right through it. So it's always worth just being aware of them, just so you can move to break even or just take some profits out the market. So again, let's say we're looking at price for the day, and we've realized that over the past couple of days, we've been ranging. So how would you trade when you're in a range? Simply using the highs and lows, because we're trading US session, the highs and lows of a previous US session, we would simply mark the highs and the lows of that session. I always mark the top of the bodies to the top of the wick. I don't do anything else. I don't mess around with order blocks. Top of the body to top of the wick, or bottom of the wick, bottom of the body to bottom of the wick. So in this case, you take the highest point of the zone that has a US session and the lowest point of the range that has a US session as well. For example, this right here. Now what would you do? The same exact concept applies. We're not taking any trades in the range. I'm not going to trade the top of the range to the bottom of the range. I'm not going to trade the top of the range and hope price comes all the way down, because that's not what trading what the market is giving you. I would trade, if we broke this structure, got a retest in of the bottom of the range, I would want to see a 5-minute engulfing to take price lower. If that happens, I want to take a zone from a previous US session that we've had before and get a target for it. So again, if we play price along, remember zone trading, you want to wait till we get a breakout of the zone, a tap back in of the zone. And when this does happen, it actually increases your win rate when you get trades like this. And if you're patient enough to wait a couple of days for us to break out the actual range, get a tap back in, or get a tap above, back in to take price higher or to take price lower. So trades like this I do look forward to, and I do wait for a break of each side. Some people trade in the range, top of the range to the bottom of the range. That's not what I teach. That's not what I do. So I'm not going to go through it today. So if we play price along here and we just see what price gives us. And again, we're waiting for US session. It doesn't matter what London session gives us. If London session gives us the perfect reaction candle from the zone, we don't take it. We always wait for US session. If you don't, you're not following your rules, your win rate's going to drop, you're going to switch strategies like that. So always, always, always make sure you're following your plan and following your strategy. Like I say, if we do break this zone, I do want to see a tap back in before we can take price to the further downside. So again, if we play price along here, we got to break below now. We got to tap back in here. If we get a 5-minute engulfing candle, you can count that as one, but to be safer, it's always best to wait for 2 candles to close, especially when you've got this big candle right here, this big bullish candle taking us right to the top. So always definitely wait for the second candle for confirmation. You don't have to, but if you want to, that's fine. If you do that, there's going to be some instances where you're going to figure out, well, price has absolutely shot away from me. Now the risk to reward isn't worth it, so I've missed out on a trade. It's going to happen. But there's also going to be situations where some people have got in on this candle and price just reverses. So at the same time, you missed out on a losing trade. So it's up to you how you want to manage it. However, personally, I would wait for the bigger candle. So now we have the bigger candle. The same rules apply. The exact same rules apply below the body, well, above the bodies, above the wicks, and above the zone. In this case, it ticks absolutely all 3. What zones do we target? Well, if we go back to the 30-minute, we might have to do some scrolling. No, we don't. Perfect. We've also got this strong sort of support zone here. Now, because the body close is the closest here, this will be my first target. You can then maybe target further down if price pushes that low, but we'll just see what price does. And again, you've got some further ones down here. You can get really into it. You can go, back so far and find so many zones, but don't overcomplicate it. I would say get 1 to 2 zones, definitely 1 of course, but don't go any further than that. 3 and 4, you're pushing it. You're just making it more complicated for yourself. That's not what I preach. Just have a zone. If price reaches here, I'd like to see it reverse. So again, if we jump to the 5-minute candle, if we jump down here and just put it onto here, it would be a 1 to 4. Now, the lower risk to reward, in theory, the higher win rate you will have. I always double up in my funded accounts. I always risk 2%. That's how I do it, and that's how I'll always do it regardless. And like I say, I have a plan that you can go through, you can have a look at, of a risk management strategy for trading prop firms. However, this would be a fantastic trade for me because technically you're making 3% off the trade. Or, if you do think, well, it's a bit more of a risky trade, I'm just going to risk 1%, you've still made 1.5%, which in the grand scheme of things is high numbers. You're going to see these guys making 1 to 16s, 1 to 9s, 1 to 5s. I get that, but the win rate is going to be a lot lower. Your hit rate is going to be lower just because the risk to reward is so much higher. So you're going to get stopped out a lot more than me. You might have a better trade than me on one of the days, being that the trade runs for longer or something like that. But with my strategy, it's simple. It's simple. We keep it simple for a reason, because it just doesn't have to be complicated. So we've got to break below, we've got to tap back in, and we've got our engulfing candle. Again, you would increase your risk to reward if you increased your risk. So if you got in on this candle as well, I'll just drag this across and try to keep it in line the best I can. Like here, we can see this would be a 1 to, let's call it 3% for the sake of the video, or a 1 to 6. So by taking more risk, obviously you're going to make more money. That's just life in general. If you take more risk in life, you will be rewarded more. You may not feel like it at the time, but down the line, you definitely will be. So I would be making 3%. Others of you might be making 6, might be making 3. Depending on how much you're risking and how eager you want to be in the market. So again, if we just play price along here, price just absolutely melts and it keeps coming down. But remember to mark out the zones because, like I say, price respects it. It comes back up, taps back in, breaks below, it might even tap back in again, and it completely obliterates it through. So it's up to you what you want to do with your risk. In terms of finding a daily bias, it's sort of simple in the sense of create the if mindset. If this happens, I would like to do this. In the real world, it's not practical. Oh, if I did that, I would be a millionaire. Well, that doesn't matter, does it? If the chart does this, I want to do that. Trade what the market is giving you, not what, the 4 hour, the 12 hour is telling you. The 12 hour could be bullish, but the day could be bearish. If you're day trading, if you want to be in a trade for an hour to 4 hours, 5 hours, maybe throughout the day, and then close it at 5 p.m, for example, I would recommend at least trying this out, maybe backtesting a little bit, give it a try, and see how it works for you. This will wrap up the video. There will be multi-parts coming, because I do want to give as much examples as possible, just finding daily bias. This might not have made a lot of sense to you, but trust me, there'll be more coming out to help you guys out, because that's what I want to do. I want to help you guys out, so let me help you, and we should be fine. So thank you so much for watching this video, and I'll see you in the next one.